If you like hearing about all the upcoming IPOs every week, you've come to the right place. And this is one of those weeks you won't want to miss. Today we'll talk about 8 companies scheduled to go public, headlined by Affirm, Poshmark, and Petco. Plus I'll give you a couple of updates on the Roblox IPO, or I guess I should say the Roblox direct listing. And we'll also talk about the big SPAC merger news with SoFi on this week's edition of IPO This Week for the week of January 11th. Welcome to the Healthy, Wealthy, and Wise channel and our weekly feature, IPO This Week, where we talk about all the companies going public for the upcoming 7 days. As always, I want to thank everyone in the community that comes back each and every week to stay on top of all the IPOs. I can't say enough how much I appreciate the support you give me by watching the videos and by pushing that like button, which really helps to let me know that you enjoy this weekly show that keeps you aware of all the new companies coming out, as well as information on lockup period expirations. And for those of you here for the first time, my name is Kevin. And if you're into staying on top of all the companies hitting the market, this channel might just be what you're looking for. So definitely consider subscribing and turning on that notification bell. That way you won't miss any videos as soon as they come out. We got a full lineup this week, so let's get started. Keeping in mind that while this video is meant to be informative, it should not be seen as a recommendation for you to take any action on the companies covered. You should always do your own research, or consult with your own financial advisor when making any investment decision. With that being said, first up we have 2 companies from China that I'll give you some overviews on. The first is Kuke Music Holding, ticker KUKE, who plans to raise $55 million at a $339 million market cap. The company licenses and streams Western classical music in China as the market leader, and additionally is the second largest online classical music subscription service provider in 2019. The company also provides music education solutions primarily to kindergartens through free placement of its smart pianos and then collects revenue from student subscriptions. The one thing I would say about the company is that they're not exactly heading into their IPO on a high note, as revenue has declined in both the fiscal year 2019 and even more severely in the first 9 months of 2020, with the company attributing some of this to the effects of the pandemic. KUKE stock looks to be priced within a range of $16 to $18. As of the time of this video, I haven't been able to confirm the exact date of the IPO. It could be as early as Monday or as late as Thursday, which is probably a good time to remind anyone new to the channel or to IPOs in general that information on IPOs can be fluid, where pricing ranges and trading dates often change. So if you see something that has changed since I filmed the video, please feel free to add any updates in the comments and I will do that as well. And also, when looking at your screen, the last column is the IPO date when the offering is actually priced. But then public trading begins almost always the next day. Now to the second Chinese company, which is Qilian International Holdings, ticker QLI, who plans to raise $30 million at a $210 million market cap. Just as a quick overview, the company focuses on the development, manufacturing, marketing, and sale of licorice products, oxytetracycline products, traditional Chinese medicine derivatives, heparin, sausage casings, and fertilizers. According to NASDAQ.com, the company is profitable but did see revenue decline in the fiscal year 2019. Qilian's IPO is expected on Monday, with pricing expected to come within a range of $5 to $7. Trading would then begin on Tuesday. Moving on, we have Driven Brands Holdings, ticker DRVN. Driven is North America's largest auto services company, which includes the well-known Meineke brand of auto repair centers. The company plans to raise $703 million at a $3.1 billion market cap from their IPO, with the proceeds going to repay debt. The company's portfolio has more than 4,100 locations across 49 states in the US and 14 countries overall. The company has had good revenue growth over the past couple of years, as well as being something that isn't all that common at the time of an IPO, and that is it's profitable. The biggest negative in the financials is the amount of debt that the company has and will have even after the IPO, even considering that the IPO proceeds will be used to help pay it down. In September, that debt was at about $2.1 billion level. We have Driven Brands IPO set for the 14th, with pricing expected to come within a range of $17 to $20. Trading would then begin on Friday. Next up, we have racing game developer Motorsport Games, ticker MSGM, who plans to raise $40 million at a $278 million market cap. Being spun out of the Motorsport Network, the company is currently the official developer and publisher of the NASCAR video game racing franchise. Motorsport Games develops and publishes multi-platform racing video games that can be used on game consoles, personal computers, and mobile platforms. Their NASCAR video games have sold over 1 million copies for game consoles and PCs. and currently they offer NASCAR Heat Mobile for iOS and Android, which has had approximately 5 million installs to date, and they are in the process of developing 2 more NASCAR mobile games with projected release dates set for this year. For fiscal year 2019 and the 9 months ended September 30th, 2020, the company reports that substantially all of their net revenue was generated from sales of their racing video games. The rate of revenue did grow faster in the first 9 months of 2020, like so many gaming companies have reported, due to the stay-at-home conditions brought on by the pandemic. Motorsport Games IPO is set for Tuesday, with pricing expected to come within a range of $16 to $18, with trading then beginning on Wednesday. Before we get to the most well-known companies on this week's calendar, we have Playtika Holding next, and they actually have the biggest deal on the table as they look to raise $1.6 billion at a $9.7 billion market cap. The company is based in Israel and is a leading developer of mostly casino-based mobile games, producing 9 of the top 100 highest-grossing games in the US. Their games are free to play, and then Playtika primarily generates revenues through in-app purchases, including the sale of virtual currency and items that can enhance their game experience. To a much lesser extent, they generate some additional revenue through in-app advertising. The company primarily grows its game portfolio through acquisitions versus developing their own. Financially, Playtika is profitable with strong cash flow generation, though its 2 top titles accounted for half of fiscal year 2019 revenue. They have steadily increased their user base and paying users and have retained them over long periods of time. In fact, the company reports that approximately half of their revenues for the 12 months ended September 30th, 2020 came from users who downloaded or first played their games in 2016 or earlier. To support the notion of their games having staying power, for the ones that they've operated for at least 5 years, they've increased revenues of 5 of them at a compound annual growth rate of 15% or more. As for details of the company going public, the Playtika IPO is set for Thursday, with pricing expected to come within a range of $22 to $24. Playtika stock would then start trading on Friday under the ticker symbol PLTK. Now for the big 3 IPOs of the week: Affirm, Petco, and Poshmark. As many of you know, IPO This Week is mostly about providing the information and data on the companies going public and the details of the IPO itself. For the most part, I stay away from analysis on this show because of that purpose, but I often have other videos where I do share my personal opinions and thoughts on some of the companies. If you're interested in hearing what I think about these 3 companies as an investment for myself, I'll link a video in the description that I made a couple of weeks ago for anyone that hasn't seen it. So let's start off with Petco stock, which will be traded under the ticker WOOF. The company's full name is actually Petco Health and Wellness, as they look to show that they are more than just a pet supply store as they continue to enhance their service offerings. As they look to go public, the company plans to raise $744 million at a $4 billion market cap. As stated in the registration statement, in the 10 months ended October 31st, Petco's net sales rose 9% over the same time a year ago, a number that jumps to 16% when looking at the most recent quarter, the biggest increase in a period of 8 straight quarters of comparable sales growth for Petco. The company is now looking to go above $5 billion in annual sales. As far as a growing market opportunity, Petco states in their filing that the number of households with pets was expected to increase by 4% this year alone, with that resulting in $4 billion in new demand for pet care products. Of course, they have competition out there, from brick-and-mortar names like PetSmart to online entities like Chewy, but there are also many other retail options for pet supplies and food. While Petco has seen growth from a strategy of modernizing many of its almost 1,500 brick-and-mortar stores and focusing more on online sales, the company still has a pretty hefty amount of debt, in fact over $3 billion. The purpose of the IPO will be to help pay down that debt, but there will still be a lot of that left, and that might turn investors away, particularly in a segment where growth is slow and steady versus fast and explosive. Now, one thing the company is looking to do to increase revenue growth is to expand its full-service veterinary hospitals across the country to provide expanded service coverage, and they're doing this by integrating these veterinary hospitals into their existing pet care centers. The Petco IPO is set for Wednesday, with pricing expected to come within a range of $14 to $16. Trading would then begin for Petco stock on Thursday. Next up, we have the Poshmark IPO, where the stock will trade under the ticker POSH. The fashion e-commerce platform plans to raise $244 million at a $3.1 billion market cap. For anyone not familiar to the company, Poshmark is a peer-to-peer online fashion marketplace. The company was founded in 2011 and says that its users spend an average of 27 minutes a day on its marketplace. And as far as the numbers of users on the platform, as of September, it had 31.7 million active users, with 83% of them being female, of which 80% belong to either the millennial or Gen Z generations. Poshmark believes it set themselves up to do well in 3 key trends that they see driving the future of retail by these younger generations. One is the continuing shift to online shopping, 2, the shift to buying secondhand items, And 3, the social aspect of fashion and shopping. Into the social aspect, it considers itself a social marketplace where it uses features typically found on social media sites, including likes and comments to foster engagement. Sounds like a good time to think about hitting that like button for the video if you haven't done it yet. The company said there were more than 56 million social interactions on the marketplace each day in 2019, with social interactions per active user up 34% compared with 2018. A lot of people call it an online thrift shop, which doesn't sound as a positive, but the numbers counteract any type of negative connotation. As there is a growing demand for secondhand apparel, gross merchandise value has grown 25% or more in 6 of the last 7 quarters. Currently, they make their money by charging a fee of 20% of the final price for sales $15 and over, or a flat rate of $2.95 for sales under $15. As for market opportunity, a recent Cohen and Company report cited on MarketWatch forecasts that shoppers will spend 52% more in secondhand items over the next 5 years, with online resale expected to grow from $7 billion in 2019 to $37 billion by 2025. Within that market, Poshmark counts Amazon, eBay, Etsy, Facebook, Mercari, Shopify, TJ Maxx, and Walmart as competitors. This leads us to their financials, where Poshmark is showing a profit for the first 9 months of 2020 after posting net losses of $14.5 million in 2018 and $48.7 million in 2019. The company also reports it had $192.8 million in revenue for the 9 months ended in September, compared with $150.5 million in the same period a year ago. The Poshmark IPO is set for Wednesday, with pricing expected to come within a range of $14 to $16. Public trading for Poshmark would then begin on Thursday. Next, we have the previously delayed, but now back on, Affirm IPO. As you might remember, Affirm postponed their IPO along with Roblox in December. Now, while Roblox decided to change course from a traditional IPO to a direct listing, Affirm decided to move forward with the traditional IPO, where they plan to raise $873 million at a $10.6 billion market cap. So if you followed Affirm, you know it's a company that is known for its buy now, pay later approach, where unlike a traditional credit card, you don't have to pay compounding interest that can significantly up the overall cost of the purchase. What Affirm does is tell you at the point of sale how much you will ultimately pay using simple interest. So when you're ready to buy something, you're told up front what you will ultimately pay for it within a time frame that is agreed upon, with no late fees and again, no compounding interest. The company looks to disrupt the traditional credit card industry with its approach. Their intention to do this should not be surprising, considering that Affirm was founded by Max Levchin, one of the co-founders of PayPal, a company that was a disruptor itself when it first came out. And PayPal had a lot of people early on like Elon Musk and Peter Thiel who have since moved on to found or develop even more successful companies, so many investors might be looking at Levchin to continue that PayPal legacy with Affirm stock. Affirm's approach looks like it's paying off in growth because, as of September 30th, 2020, more than 6.2 million consumers have completed approximately 17.3 million transactions with over 6,500 merchants on Affirm's platform. And as Cello covers in the community has shared with us in the comments, the company has a strong net promoter score of over 80, which measures the willingness of customers to recommend a company's products or services to others, so this should be seen as a positive when considering the potential for existing user revenue growth. And to that point, financially, for the fiscal years ended June 30th for 2019 and 2020, their total revenue had year-over-year growth of approximately 93%, reaching $509.5 million as of June 30th, 2020. Now from their filing, one potential concern is that 28% of their fiscal year 2020 revenue had come from Peloton, so that's a lot of concentration in one customer, which adds risk to the equation, but that was very likely partly due to the huge sales Peloton was having as it benefited from the pandemic, so we might expect that percentage to come down. Although for the quarter ended September 30th, that number actually further rose to 30%, so just something to be aware of. Now with new partnerships with other retailers being created, such as Neiman Marcus being added in November, the customer concentration issue will probably dissipate as time goes on. The Affirm IPO is set for Wednesday, with pricing expected to come within a range of $14 to $16. Trading would then begin on Thursday, with Affirm stock being available under the ticker AFRM. So that's your list of companies coming out. Which ones are you interested in? Let us know in the comments. Now we had a lot of big news last week, one being Roblox's decision to change course and go public with a direct listing instead of a traditional IPO, in which I talked about in another video. After that video, an updated filing came out, and I'll dedicate another video on that soon, but a couple of things I'll give you as a heads up on. One is that they stated an unlisted date in February to go public, so right now we can expect them to go public fairly soon. And two, there will be no lockup agreements going into the listing. This is what's commonly done with direct listings, although I know many of you have watched Palantir's direct listing come with these lockups, so you may have had some questions about it. I'll have a lot more on the Roblox DPO on the channel, so definitely stay tuned. Now today I want to talk more about another big piece of news that dropped last week, and that was SoFi, a popular financial technology company making the decision to go public through Social Capital's IPOE SPAC. So if you've been interested in getting SoFi stock when it comes out, you'll now have a chance. For some background on SoFi first, they have grown to become a one-stop shop for financial services. They were initially focused on, and most commonly thought of, for its student loan servicing, but they have expanded their offerings to include personal loan refinancing, mortgages, credit cards, insurance, investing, and deposit accounts. And reportedly, they now have more than 1.8 million members. SoFi's full suite of financial products claims it offers its members the efficiency and convenience that only an integrated digital platform can provide, and allows them to manage their financial lives in one application, all easily accessible on their phone. Last year, SoFi acquired Galileo, which has approximately 50 million accounts on this platform, and allowed them to get deeper into the B2B market. SoFi's consumer and enterprise businesses are considered to be highly complementary, enabling SoFi to provide faster service to both SoFi members and the customer of Galileo's clients. They have experienced rapid acceleration with this strategy and have achieved 6 consecutive quarters of year-over-year member growth. From a Business Wire release, the company has delivered over $200 million in total net revenue in the third quarter of 2020 and is on track to generate approximately $1 billion of estimated adjusted net revenue in 2021, representing year-over-year growth of approximately 60% and full-year adjusted EBITDA profitability. On top of all of this, SoFi received preliminary conditional approval for a national bank charter in October of 2020. If SoFi obtains final regulatory approval to own a bank, it would have a lower cost of funds to further support SoFi's growth. Now to the SPAC itself, it's another one founded by venture capitalist Chamath Palihapitiya, who has taken Virgin Galactic Holdings, Open Door Labs, and Clover Health public through the SPAC route successfully over the past couple of years. The deal values SoFi at $8.65 billion, which was valued last May at $5.7 billion. When making the decision to target SoFi, IPOE felt that the company was strategically set up to meet the needs of mobile-first consumers and lower the cost of banking through technology. There is also a concurrent $370 million investment from T. Rowe Price that you might find interesting. The transaction of the deal is expected to close sometime by the end of the first quarter. I know between the interest in SoFi going public and the success of the SPAC's founder, there will be a lot of investors looking to get in here. It's probably noticeable that I focus more on traditional IPOs on the channel, but because of past interest in the SoFi IPO by some of you in the community, I'll plan to talk more about them in future videos as more information becomes available. Alright, so let's move on to lockup expirations. If you wonder why we cover them, and haven't seen the video I put out last week that talks about what they are, and gives some examples of some popular companies that recently have had them, I'd definitely check it out, as the information might help you in enhancing your own IPO investing strategy. For this week we have GoHealth and Encino on the 11th, and then Trine Insurance Group and Relay Therapeutics on the 12th, and lastly I have ALX Oncology on the 13th. Okay, so there you have it, another episode of IPO This Week in the books. Again, if you enjoyed the video and want to see more videos like this, please like it, comment on it, and share with your friends and on any of your social media sites. And speaking of social media, I just made the leap to Instagram last week, so definitely add me there. And if you're new to the channel or just an occasional visitor, we'd love to have you join the community. It's totally free, you just gotta press that little red subscribe button. And with that, I wish you a good week of trading, thank you for watching, and until next time, have a great day.